Hi, everyone. Thank you for joining us for the Logics event. Welcome to our audience, to existing subscribers, and to any new readers. The Logic is an independent news organization backed by the Financial Times, reporting on business and tech, as well as the innovation economy, and providing subscribers with a lot of in-depth reporting. Is your team reading The Logic? The answer to that should be yes. If you're interested in a team subscription, please contact Armida Marufi, the Logic's corporate subscription manager, via the email linked in the chat below. Today's conversation comes at a time when Canada is navigating some really tough economic questions. Policymakers are trying to strike a balance on the one hand between keeping our industries competitive, managing fiscal pressures, and also responding to a world that feels increasingly uncertain. So, key questions that we'll explore today are: how do these shifting dynamics in industrial policy and trade affect Canada's place in the global economy? And what should businesses, investors, and households really be watching most closely in the months ahead? We've got a terrific panel with us to unpack some of these issues. We have Laura Osman, who is our Ottawa correspondent, and Kevin Carmichael, who is the Logic's columnist and editor at large. Before we get to the discussion, I'd like to first thank our partner and sponsor for today's event, Royce Mendes, the managing director and head of macro strategy at Desjardins Group. Royce, I'll hand it over to you.
Thank you, and hi, everyone. Let me begin by extending a sincere thank you to the Logic and Desjardins for organizing this really timely and thought-provoking event. I'm very much looking forward to the panel discussion that will follow. There's a lot to unpack today, and I'll actually leave the broader themes to Kevin, Sharon, and Laura, who I know will offer really valuable perspectives. I'll keep my remarks quite brief and focused. What I want to highlight is the shifting global landscape, and more specifically, really what it means for Canada. Because in this moment of transition, the federal budget can be much more than a fiscal document. It can actually be a strategic tool that can help position our country to seize emerging opportunities. There's growing evidence that global investors are becoming more cautious about the US market. The US dollar is having one of its worst years on record. Gold prices have surged, reflecting a level of unease we haven't seen in some time. And while US stock indices have continued to climb in 2025, they've significantly underperformed markets in Canada, Western Europe, and Asia. Investors are now looking to diversify, and Canada is increasingly a destination for capital. Across a range of indicators that we're watching, we see strong global and domestic demand for Canadian assets this year. Government of Canada bonds, provincial bonds, and Canadian equities have all seen robust interest. Market pricing really tells the story. Provincial bond spreads are extremely tight, and the TSX is having a record year. Moreover, after 15 years of stagnation, foreign direct investment into Canada is finally showing renewed signs of strength. So you might ask, why Canada? Well, I think there are a few reasons that reflect the importance of this moment and why investors are looking to Canada. I'll say, while we're not immune to some of the political divisions that we see in other parts of the world, we're far less polarized than many of our G7 peers with whom we're competing with capital for. We're rich in natural resources, yet we still boast a diversified economy. Investing in Canada still also offers leverage to the upside in the US economy, given our deep trade ties. And perhaps most importantly for today's discussion, our federal government's debt remains AAA rated by 2 out of the 3 major rating agencies. Of course, there are risks, and chief among them, I think, for today's discussion is the possibility that the budget leans too heavily on spending without delivering sufficient savings. The federal government has made significant commitments to defense, to infrastructure, and to housing. So far, So far, global investors appear relatively calm about Canada's fiscal outlook, despite these announcements. Perhaps that's because Canada started the year as what I would call the cleanest shirt in the dirty laundry basket. Our general government deficit as a share of GDP, which includes federal, provincial, and municipal debt, was the lowest in the G7. And even with the deficits projected for this year, the increases in deficits, we're likely to maintain that pole position. So my message is this: as the global order shifts, Canada has a real opportunity to attract and retain significantly more capital. And we're already seeing that play out. If crafted wisely, the budget can help us build on this momentum. Now, before I hand things back to the team at The Logic, I'd like to just take a moment to remind everyone that our research is available on the Desjardins Economics website. And if you're a client of Desjardins Capital Markets, you can reach out to your relationship manager to start receiving my team's macro strategy publications directly. And with that, I'd say thank you to everyone who joined today, and I'll pass it back to the team at The Logic.
Thanks so much, Royce. That's a great segue to today's panel. And before we get started here, a reminder to your audience: please put any questions that you have via the chat or the Q&A box. We'll be answering them throughout the event, so please don't wait till the very end to do so. So the first thing I want to talk about is something that's probably on everyone's minds, which is the upcoming federal budget. The Liberals are set to table their first budget under Prime Minister Mark Carney this November 4th. They've already signaled that they want to cut operational spending 7.5% in 2026 to 27, 10% the year after, and then 15% by 2028 to 29. Carney has flagged that this budget will have a mix of both austerity and investment, and that we'll be expecting a bigger deficit. But Laura, I know some interesting news kind of came out this morning. Maybe I'll kick this question to you first. What are you expecting? What will you be watching out for?
So I think one of the key questions is how much cost cutting they're going to be doing. The government's continuous message since the federal election has we're going to spend less and invest more. And the spending less part is a bit of a question mark, as is the spending more part, the investing more part, right? So how much are they looking to cut? My sources have told me that they're going through this cost cutting exercise. Some of that is going to materialize in the budget, but not all of it. And so how much are they going to be projecting, future savings based on assumptions? How much of it is real? I think those are going to be key questions. And we know that there's going to be a lot of new spending on the military, on support for tariff affected industries, for housing. But we don't know what sort of the fiscal anchors are going to be. What are the upper limits on that spending? And I think that's another key question in terms of how are you going to keep the finances in check long term? Because as Royce sort of beautifully laid the table here, we're maybe not in a period of crisis at the moment in terms of, our debt to GDP levels, but what are the upper limits? So we got a bit of a briefing today on what we can expect to see in the budget and how they're going to be breaking out the capital spending from the operational spending for the first time. The good news is we're still going to be seeing the same numbers we see every year. We're going to be able to do apples to apples comparisons to past years in terms of program spending and new things, which is, I think, good news. But we're not hearing any new information about what some of the upper limits are going to be on that deficit number. We just know that we're going to be able to see it.
Okay. And I just wanted to follow up on one thing you mentioned on the fiscal anchors. So Carney has said that the rate of federal spending over the last decade, which is I believe more than 7%, is actually faster than the rate of growth of our economy. Does that put kind of previous fiscal anchors into jeopardy? Like, what are your thoughts on that?
I mean, one of the final acts of the Trudeau government was to totally blow their fiscal anchor that they had set out, and that was sort of why Chrystia Freeland, the finance minister at the time, quit in such spectacular fashion, which ultimately, may have cost Justin Trudeau his job as prime minister. So they haven't been good about keeping those fiscal anchors that they've been promising to reach, and now we have a situation where they're not really promising any measurable fiscal anchors whatsoever, except on the operating side. They say they want to balance the operating budget over the next 3 years. That's the day-to-day spending of government. But that doesn't necessarily mean we're going to have a smaller deficit. In fact, we know we're going to have a bigger one. It's just a question of how much bigger it's going to be. I think that question of how we move forward in a fiscally responsible way while still responding to the opportunity and the crisis that we're finding ourselves in right now is going to be a key question. And I know, Kevin, you've written about this recently in terms of whether we should be panicking at this point or not. So I'm interested to hear from you about at what threshold you think that panic button should be pushed.
Yeah, sure. I mean, look, who knows when the panic button should actually be pushed? I'm pretty comfortable in saying that it's not today. Um, to your question, Sharon, I mean, so the short answer is yes, absolutely. We're going to be blowing those previous fiscal anchors and guardrails, but I think it's very important to keep in mind that the context has totally changed, right? So lots of frustration with the previous government for pushing through or pushing off those or making good on their promises around certain fiscal targets. That was frustrating to a lot of people, and I expect the majority of people on this call, because of the way they were deploying that money, the way they were spending that money. Think about it this way. I mean, there is a qualitative difference between spending and investment, and people get upset about Carney's phrasing there. But it's a fair differentiation. And think of it like this: if I go out and buy a Tesla tomorrow, I'm spending. If I go out and buy Tesla stock, I'm investing. And that's the situation that Canada finds itself. It's an important difference. I mean, we've maxed out the credit card on stuff that actually isn't going to contribute to the economy over the longer run. Some of it will, lots of it won't. So Carney's and the federal government wants to pull back the stuff that isn't going to contribute to a growing economy. But because of the context we're in, he's going to lean into the stuff that will. He's going to buy Tesla stock, apparently. And is there some risk there? Absolutely. But I'm reminded of 2010 when I thought I should buy some Tesla stock and didn't. And now look at it. I might not be here today if I'd bought all that stock. So I mean, that's the way we have to think about the budget going into budget season, into the next number of weeks as we talk about it and assessing it after the fact.
Yeah, that's a great analogy. And you mentioned context, which is interesting because trade basically dominated the story in Q2 and leading into Q3. Exports slumped, tariffs really hit hard. Kevin, if I can just stay with you for a minute, was that a one-off shock, or should we expect trade to be a drag on growth for the rest of the year? I know Carney is scheduled to meet with Trump on a second, I guess, working a visit tomorrow. So yeah, what are your thoughts on that?
I'm going to go on a limb and call it a one-off shock, at least of the magnitude that we saw in the previous quarter. So I don't know that trade is necessarily going to be a drag on growth going forward, in that most of the stuff that we send to the US, and therefore most of the stuff that we ship abroad, is actually shielded by CUSMA. But nor is trade necessarily going to be the motor that it's been either. And that's mostly, well, for two reasons. One, we know the stuff that is outside CUSMA is still rather important. And so that will be a drag, of course, that we won't be able to entirely overcome. The other thing that's going on, Sharon, I'm sure you've seen it. I'd like your thoughts on what you're seeing through as you look through the markets and see what's going on there. But the US economy is in a bit of trouble. The Mag 7, the AI boom is spectacular to watch. But that's kind of in some ways, that's kind of the only positive story in the US right now. Otherwise, the economy is really slowing down as businesses adjust to the new US tariff regime. So you saw the Fed cut at the last meeting. That the Fed only cuts when the economy is in trouble, right? So there's anticipation that more cuts will be coming in the US. The hiring numbers over the summer in the US have been terrible. That matters for us because let's pretend that there wasn't this sort of new tariff regime. We'd be still super worried about a US economy that's basically slowed to a standstill. So maybe not necessarily a drag from trade, but not much of a kick either, I don't think, going into the second half of the year.
Yeah, yeah, and you raised a good point that there were a lot of goods that passed through that were USMCA compliant, so to speak. I think data shows there was 92% of Canadian goods US imported in June faced zero tariffs. So that's something worth bearing in mind as well. I want to talk about industrial policy for a second. Laura, as you know, Carney has announced a Buy Canadian initiative as part of Canada's industrial policy, but that'll probably take time to play out. How would you characterize Carney's approach compared to previous efforts like his predecessors, and what kind of timeline are we looking at, particularly around issues like housing and related programs before we really start to see some of those benefits materialize?
Yeah, I think as Kevin kind of mentioned, there's a big difference between spending and investing, and they're really trying to zero in on that investing part with their new industrial strategies. And so when we talk about the Buy Canadian policy, that is about helping tariff affected companies stay afloat and also adapt and grow to sort of new realities, new trade partners, new product demands. And it's also about helping smaller companies scale up using that sort of stable demand from the government, giving those companies a stable customer essentially, and the revenues that go along with it so that they can plan for the future and they can grow, and ultimately contribute to the economy. But there's still some really key and important questions to answer in terms of how that's going to work, including what is your ultimate policy objective? Is it that Canadian owned companies with Canadian IP are going to be scaling up, or is it that we're going to have more Canadian jobs? Those are different. Those are different objectives. They're both worthy objectives, especially considering Canada's job numbers. The government's going to have to contend with the job question. But you may define Canadian differently based on what you're trying to accomplish here. And so that's going to take time. They're basically going back to the drawing board, trying to figure out what do we even mean by Canadian? And then they're going to be thinking long term about, okay, how do we factor this in with free trade agreements from other countries? How do we weed out countries that say they're Canadian, but they're not? All of these kinds of questions still need to be answered before they can even begin. And so these are going to take a long time. And same with their housing plan to build more affordable housing, try to introduce more prefab construction in Canada, build the productivity in the housing sector. These are long-term projects. And when we talk about pivoting to defense, for example, in the war era, we were taking existing manufacturing capacity and repurposing it. In this case, in a lot of instances, we're talking about building that manufacturing capacity. It's sort of a bigger project and is going to take a longer time. So that's a long-term project. I think the question is, how much political capital does Mark Carney and his government have in order to see that through, given that there's going to be short-term pain. People are going to be feeling the impacts, at home, in their businesses. And are they going to give Mark Carney the time and space to try to figure this out, or are they going to try to look for some more immediate solutions in the shorter term?
Yeah. So no overnight changes, but it'll take some time for things to really play out here. Before I jump into the next question, reminder to our audience, please put your questions into the chat. We'll be going through them, and I think it's a great opportunity for you to ask some of our great panelists on this call if you have any burning questions about Canada's economy. So Kevin, you alluded to this earlier, but I wanted to ask about some economic indicators, which is firmly in your wheelhouse. So the Bank of Canada and the U.S. Fed have both started cutting rates, as you mentioned, after a long pause, citing softer unemployment and signs that inflation might be easing. What does that, I guess, from the Canadian perspective, what does that tell us about where the economy is headed? I note that GDP bounced back in July after 3 months of decline, so that's an interesting data point. In your opinion, are we out of the weeds?
I wouldn't say we're out of the weeds, and that's. I mean, you just have to look at the hiring numbers that Laura alluded to earlier. I mean, they're not good. The unemployment rate is up around and above, I guess now 7%. It had been hovering around 5% heading into the COVID pandemic. 5% maybe unusually low, but certainly 7% is not good. So that's what the Bank of Canada is responding to. I mean, there's no model in the place, I don't imagine, that says that you should be avoiding cutting rates when you have an unemployment rate that high. I think the thing that we need to keep in mind, though, when we're thinking about monetary policy, and I've done this so many times now that I feel like I should have a public service announcement contract with the central bank at this stage. But this isn't the financial crisis. This isn't the COVID crisis where the central banks could sweep in, drop interest rates to zero, and assume that we'll sort of get back to something closer to normal in a hurry. The reason that's not going to be the case this time is because, of course, what we're seeing around inflation now it's come back to a point where you might say that the Bank of Canada is mostly comfortable with the trajectory, but it's still a bit high. And what that means is they don't have as much room to maneuver as they did in previous crises, previous situations like this. And the reason they don't have as much room to maneuver, one of the reasons, a major reason I think that inflation has become a bit sticky is simply because the economy isn't strong enough, doesn't have the capacity to deal with all that's coming at it right now. I guess I'll flip back to another, car or automotive related analogy, but really I think we need to think about the economy as it is right now because of the tariff shock, because of everything that's going on with trade, because of the productivity crisis that we've written so much about here at The Logic over the last year and a half. The economy really is smaller today than it was, say, a year ago, and never mind 2 years ago or longer. So you have to really think about it as like a four-cylinder engine versus a six-cylinder or an eight-cylinder engine. And when you punch the gas on a four-cylinder engine, you just don't get the same sort of traction that you would if you had a bigger engine. But your engine is going to overheat just as quickly, and that's kind of the situation that the Bank of Canada finds itself in now. So it will, I assume, given the trajectory of the labor market and some of the other things we're seeing, probably cut once or twice more over the rest of the year, but it really doesn't have that much to do, or it has in some ways there's a lot to do, but there's just not much of it that the Bank of Canada itself can do. It will sort of, I guess I've talked about it as it'll do what it can to ease the pain, but it can't get the economy out of this situation. That's really going to have to be a combination of fiscal policy and business investment.
Yeah, it seems like it's in a pretty tricky spot. And yeah, The Logic has written a lot about the productivity crisis. Kevin, you've spearheaded a lot of that coverage, which you can find on our website. Um, I want to talk about markets. We promised that we would talk about markets, so we were gonna chat about that for a bit. It seems like markets are really shrugging off the volatility from the trade war. Canada's main stock index hit a record high. The S&P and TSX Composite is up 22% year to date, at least last I checked this morning. And energy and base metals seem to be pulling a lot of the weight. Kevin or Laura, what's your read on how investors are interpreting all of this? Are they too optimistic, or are they getting ahead of themselves here?
I can start that. I'm also curious what you think, Sharon. So why don't you jump in here too? You're closer to Bay Street than I am, sitting here in comfy Montreal. Are investors complacent? Yeah, maybe. Look, we're in one of those. We're in the middle of the next industrial revolution, and every industrial revolution that we've seen to date comes with all kinds of booms and busts. So I think it's pretty clear we're experiencing something of an AI bubble. Will it burst? History tells us it's going to burst. Maybe we can learn a bit from history and be clever enough to deflate it rather than have it cause all the sort of distress that we associate with every other bubble bursting. But there's a certain amount of complacency that is, I think, being amplified by the shift to passive investment over the past decade or so. We don't talk about that as much in the conversation about markets. It's all sort of focused on all the spending and excitement around AI. But I've been reading some research lately that shows that basically there's more money coming into the markets now that's passive than active. So much so that the remaining active investors can't really do anything to offset what is essentially zombie investing, just sort of like matching to whatever the percentages are on the S&P 500 or whatever index you might be using as your benchmark. That's problematic because it's going to, as I said, amplify what is already probably a boom being inflated to a certain degree by exuberance. So yeah, it makes me a bit nervous having sort of observed a couple of these more recent crises that yeah, I mean I remember, and I keep carrying around with me something that Carolyn Rogers, the senior deputy at the Bank of Canada, used to describe what she sees in the markets right now. And she's like, they're priced to perfection. It's not a perfect world we're in right now. And so one of these days, it just feels like to me, somebody's going to wake up and realize that, things aren't as good as they look, and we're going to see the kind of unraveling that we've come to see in previous situations like this.
Sharon,
Yeah.
I'm so curious what you think about this as sort of our markets guru on this call, because it just has started to feel that the volatility has become the new norm, especially since the COVID pandemic. So how do you sort of rate what the kind of volatility we're seeing in the markets, or maybe lack thereof, considering how crazy the news cycle has been over the last year?
Yeah, no, it has indeed been absolutely insane. And I think I think you've had the right word for it, which is that things are being normalized. Like there is a period of normalization. In the beginning when Trump was really threatening tariffs on some of the U.S.'s biggest global partners, people chalk that up to, that's his political posturing. He's not really gonna follow through on this. There was the whole Trump always chickens out taco trade. It seems like that is no longer the case. The tariffs have come into effect, and a lot of companies are really recalibrating and trying to position their businesses so that they are able to survive the next 4 years or however long this trade policy stays in place. And we mentioned that, USMCA, there were a lot of companies that were kind of insulated from some tariffs, but there was also companies that benefited from the volatility. So if you look at some of the big six banks in their third quarter, for example, CIBC, National Bank, Scotiabank all pulled in record amounts for advising on and underwriting deals. So there's a degree which a lot of companies, or at least the banks rather, were able to benefit from some of that volatility. But in either case, I think that we're kind of at a phase now where company executives are realizing that this is the state of play, and that there may be some green shoots coming out of that. I do want to flip over to some of our audience questions. We have a question from Saya, and Saya is asking, how is Canada's IPO activity compared to the US, and are we starting to see things pick up with more listings? Kevin, would you like to take that, or I'm happy to as well.
Where's Royce? Can we bring him back on? Look, I'll do my best with this one. It's not something I watch on a daily basis, but I do pay a bit of attention off the corner of my eye. I'm not seeing a lot of evidence that we're seeing any sort of great excitement around IPOs in Canada. We're seeing it in the US, but Sharon, you come in here and correct me if I'm wrong, but a great deal of that excitement in the US is related to AI, crypto, the usual suspects. So if you got a startup in that vein, you might have some luck. But other than that, the vibes at least tell me that if you're not doing something in AI or crypto, it's a harder time to raise venture money, at least right now. I guess in the context of Canada, I guess I'll just add a couple of things. I mean, I suspect that investors, maybe I'll say two things. I think things are starting to move. You can feel more, you can feel more activity on the margins around corporate Canada. You can see that they're getting interested in a kind of growth agenda that the current government is trying to put in place. They see some green shoots of government doing what it can to at least remove away some of the regulatory barriers that have been such an issue in Canada for a long time. So I think maybe we're going to get there, But I suspect that because the business community in Canada has just been so frustrated for so long, they're going to actually want to see a little more evidence actually before you see a real move. So maybe that budget's probably going to be important. Makes it even more important than it's going to be. I mean, I don't. It's going to be important. There's no question about that. So I expect though that the investing community might want to see just what the government does in the end before it deploys real money. So I think it might be coming, but I have to say that I don't sense it yet.
Yeah, I think that's right. It's been incredibly quiet on the IPO front. Most of the capital raising has been through M&A exits or foreign listings. The US has had a blockbuster quarter. If my memory serves me right, in the third quarter, there were, I believe, 60 IPOs in the US. In Canada, the only notable one was Go Residential REIT on the TSX. So the pipeline is still, I would say, relatively frozen here. The CSA has introduced measures to remove some of that red tape and make it easier for new issuers. But I would say that there's still kind of a long way to go to shore up confidence. On the other hand, though, M&A activity has really picked up. M&A deal value in Canada in the third quarter totaled 84 billion, which is more than a 50% spike from last year. So you're seeing transaction volumes down, but larger average deal sizes. So bigger, more strategic deals are happening. I guess would like to hear your thoughts on this, Kevin, but what does this trend mean for Canada's economy overall, and how might that influence investment, competition, and growth across key sectors? At least from the M&A front, it seems like business is back, maybe not so much on IPOs.
Yeah, no, super important. I mean, business investment has, for all intents and purposes, been dead. I'm exaggerating to make a point, but the business investment has been stagnant for just way too long. Big part of the problem in Canada. That's why this budget, that's why leaning into industrial policy is so important, because Canadian companies now, investors now in Canada are just some combination of frustrated and positioned, frankly, well enough that they don't need to take any great risk unless they really have to. So by frustration, of course, I mean just the regulatory environment. And you mentioned the CSA, Laura. That's something, again, that we don't talk enough about, but it's just kind of a pain to list in Canada and to frankly to launch. And by incentives, I mean profit margins are relatively strong in Canada, certainly well above the average of the last decade. We've got a lot of big oligopolistic companies who just frankly have a different incentive structure than, say, a startup or a company that's trying to scale. It would be better if we had it'd be far better if we had a greater mix, but we don't. So we're going to have to do something to make it so those older companies who are comfortable paying out, whose investors, I suppose I should say, their shareholders, who are comfortable receiving decent dividends, who have a far lower risk tolerance. We're going to have to do some things to make it interesting for companies like those to spend real money. And that's going to require, as I see it, the federal government and provincial governments putting down real money of their own to get the flywheel going, to clear a path that some of these older legacy companies in Canada will feel comfortable coming in behind without taking on amount of risk that they're not comfortable with. So it feels like all this is happening. And so I'm relatively confident, I guess, that to your point, Sharon, that we're seeing early signs, green shoots, that some things are happening. I think the federal government and the provincial governments are in a position to accelerate that activity. But back to my point about frustration, we're going to see more than announcements, right? We're going to have to see some evidence that this is real. Maybe it's a good chance to bring in Laura to see what she thinks about whether, after covering for the last decade or so a government that was, we like to say, perhaps too cynically, but I'm not always sure. It was big on the announcement, less big on the execution, whether she's seeing anything really different there in Ottawa, whether the new government really is going to make good on the announcements, or whether we're just gonna run out of momentum after we frame up what we need to do. But I guess the question is, can we really do it? Is the political will there to execute?
Yeah, I think exactly as you say, Kevin, the criticism of Ottawa is always that they love to make announcements, but the results are rarely even measured, let alone realized. And so I think that we're still in the announcement phase for Mark Carney, right? We're still in the early offings of his time as prime minister and his new policy. He's starting a lot of new bureaucracies. That's another point of criticism for his political opponents, is that, we're seeing, for example, a new bureaucracy to handle military procurement. We're seeing a new bureaucracy to handle housing investments. And so, we don't know whether once those bureaucracies are set up, once we have a new major projects office, if things are actually going to move more smoothly, if we're actually going to see change in the way companies are able to get approvals for major projects, whether houses are built more quickly, whether we start to see more procurement going to Canadian companies. The proof's going to be in the pudding, and there is a lot of frustration. And I think that a lot of companies have been down this road before. There's a lot of optimism right now, and the Mark Carney government is saying a lot of the right things as far as what a lot of companies want to hear, particularly in the startup sort of innovation sector. But they don't know if it's going to be realized, because Justin Trudeau said those same things before in the past, and they didn't see the results they were looking for. So I think this budget's going to be really important in terms of setting direction, but it's going to be several years before we have a sense of whether they're going to actually be able to accomplish the things they say they are going to accomplish. And on top of that, they're also promising the moon in a lot of cases, right? They're going to double the rate of home building in Canada. They're going to get major projects, shovels in the ground within 2 years. They're going to, we're going to see 5% of our GDP spent on military, and that's going to create all new industries in Canada that are going to create lots of jobs and growth opportunities all over the place. These are big, big promises, and we won't know whether they're going to make them for a long time, if the public even gives them the opportunity to make it to that point, right? Like, they may lose patience with them beforehand. We're in a minority government. That makes things tougher for Mark Carney and his folks. So I think that, there's certainly optimism. We just don't know if it's going to be realized.
Yeah, the proof is in the pudding. I love that. I want to take another question from the audience. We have a question from James, who's asking, what sort of policy prescriptions are you looking at to see from the federal government to encourage the early stage innovation economy in Canada? Laura, do you want to take that one?
Yeah, I think that's a really interesting question, because I think we're moving away from this era of dedicated programs, going back to, Justin Trudeau and the gang in terms of the kinds of announcements they would like to make. They would start up these really dedicated funding streams that would go to particular companies. And in some cases were really valuable. In others, there's been criticisms that they weren't. There's a big program review going on right now, and you can imagine that a lot of those could wind up on the chopping block. And so you would think there would be more nerves about that generally in the tech community, but I think that folks are seeing a lot of opportunity in this Buy Canadian policy, in the amount of defense procurement spending the government plans to do. So rather than getting grants, subsidies, tax credits, those sorts of things, and those things will still exist, maybe to a lesser extent than what we see now, they're looking at revenue, and that's exciting for them. The question is, are they going to be able to actually access it, or is it going to end up going to multinationals that happen to have a presence in Canada? How strict is that criteria going to be around military procurement spending? There's there's a saying going around Ottawa, like, anything can be military spending if you believe in yourself, right? There's like a lot of applications that you could say apply to national security, national infrastructure security, possible dual use military applications. And I think that that's where a lot of these programs are going to be trending toward, and a lot of companies are kind of orienting themselves accordingly. But we haven't seen the details of the policy yet to know what the access is going to be, particularly for small and medium-sized enterprises that don't have the government relations arms, that don't have sort of the lobbying capabilities that some of these bigger companies do. And so while we're seeing, a lot of emphasis on Cohere, for example, from our new AI minister, and there's going to certainly be picking of winners and losers at some point along this process, The question is how these smaller enterprises sort of get their hands up in the air and get government to notice them. Because one of the things that CEOs have been saying to me is that the government doesn't know what kind of capabilities we have in Canada right now. And so it's hard for them to leverage that and to make sure that the money gets into those hands. So that's going to be a big exercise on the government side, but it's also going to be, I think, incumbent on industry to make sure that the government knows that they're there so that they can get their hands on that cash.
Yeah, those are some really important considerations. Thanks, Laura. We have a question for Kevin from Laura, from another Laura from Dimi Ricardo. Laura's asking, or noting rather, that the federal government released a number of measures to cut red tape, to boost private investments and unlock innovation and productivity. Was this enough? And what should we see in the coming budget as more concrete action plan and direction and strategy comes into play?
Is it enough? I'll say yeah. I'll say yes, but again, as to use a favorite on this show that we're putting together, the proof will be in the pudding. I've seen it written, and of course, it's a truism. Every government comes in and promises a program review. Even the much maligned Trudeau government did some program reviews, but they never really amounted to anything. I'm going to say that a program review in these circumstances, oriented or put in motion by Mark Carney, is going to be different than a program review put in motion by Justin Trudeau. So I think we need to look at the motivations and the interests and the priorities of the people behind what's going on in Ottawa right now. And it should be evident to everyone that Mark Carney has very different priorities than the previous government did. So I think a program review put forward by this government should be meaningful. As Laura was speaking, I was thinking of something, a subtle difference between the way they're talking about investing and the way the previous government talked about investing. I mean, one of the reasons that you saw so much of the tax breaks and credits and things put in place for innovation in Canada going to multinationals is because the multinationals could come in and promise to create lots of jobs. Mark Carney, and we always, that's been a critique of the previous government's approach for a long time, that we're too, in the kind of modern economy we're in, we're too focused on trying to create jobs when really what we need to do is create wealth and things that will be the foundation to create some of our own jobs in the future. Well, you see Mark Carney's government talking more like that. So I think that's another reason to feel confident that at least the things that they attempt to execute over the next number of months and years, depending on when we might think there'd be a next election and how successful they might be, will be different than what we've seen in the past. So yeah, I mean, I think I think there's reason to be confident that will it. Is feeling confident enough to predict that that this is a new day, a new era? Maybe not, but I think a lot of the stuff that we're seeing out of Ottawa is the kinds of things that people like me have been begging that place to do for the better part of 2 decades now.
I think it's worth noting too that they've actually put out a list of the red tape that they want to cut. That's, I think, critical in terms of transparency and accountability, in terms of actually realizing the kinds of red tape cutting that they want to do. In the past, we've heard we're going to cut X amount of red tape. We don't really know what it is they're cutting. We don't really know to what effect. In this case, they've published it publicly to say, this is what we're going to do. We're going to hold the departments accountable for actually doing it. If you don't think it's enough, there could be political pressure for them to do more. If, for example, on the procurement side, it's still a total labyrinth to try to get a government contract, then they can try to make that path easier if there is more sort of political pressure on them, and they're going to be feeling that pressure because of the promises they're making. So I think that transparency and accountability piece is also really key.
Mm-hmm. Transparency and accountability, great. We have time for one more audience question. This one is from Ann K. So John Graham, CEO of CPP Investments, has emphasized key investors need for demonstrated stability, predictability, and transparency. And Anne is asking how and when are these in place? How will this kind of improve the situation in Canada?
I'll take that one, just because Laura's in some ways just answered herself. I mean, transparency. I mean, a lot of the things that Laura's talked about today are key, and are evidence that this government is moving toward more transparency when it comes to the business environment. So the kinds of things that the Carney government is doing are critical to this. Laura started off by talking about another example. There was lots of grumbling about there. Well, what does spend less, invest more mean? Well, the government has started to show the investing community what that means, what that looks like. It'll be up to all of us to decide whether that makes sense or we like it, but it'll be out there for us to see and assess. Red tape review, the same thing as Laura just described. These are the kinds of things that the investing community have been demanding for a long, long time. Like, they wanted to know just what the rules are, and then we can decide whether we want to execute, and two, how we can go about doing it. For too long in Canada has been a bit of a maze and a total confusion when it comes to that. So I think that, again, because we're seeing more evidence of putting things in place that an investor can sort of look at, read, assess, and then and make some decisions, should make a huge difference. I mean, the Major Projects Office and that whole initiative, massive. We haven't talked about it very much, but that's the kind of thing that will get some momentum going, because it's starting to become clear, one, that you can have a certain amount of confidence that at least those the investments that make the list are actually going to go forward in a certain amount of time. And then you can also get the kind of idea that it can start sort of mimicking those kinds of projects elsewhere. I mean, at the end of the day, investors just want a certain return, so I don't know that they certainly necessarily care about the kind of investment they're making. They just want one that's going to meet their goals. So they can look at those lists and say, okay, well, if I do something like that, if I find a copper mine somewhere and finance that, the Canadian government is going to make sure that happens. You couldn't say that with a lot of confidence 5 years ago, but maybe now that you can, and that should, in theory at least, and hopefully in practice, do something about that stagnant business investment that we've been coping with in Canada for so long.
Yeah. Yeah, thank you for that. That's a good note to almost wrap things up with. I want to ask one final question before we do wrap, and it's kind of looking at forward-looking signals and risk. And I'll throw this question open to both of you. If you're a Canadian CEO and you're trying to read the tea leaves, where would you be looking at for the earliest signs that things are getting better or worse? What are kind of the big signals, the key signals that you're looking at?
I think I'm just interested in whether companies are able to realize the kind of growth opportunities that the government has been promising, right? That they're going to be actually giving these companies the revenue they need to have the stability in order to grow. And so I think the key indicator is, when does the money start flowing, and who does it start flowing to? Is it going to Canadian companies that are headquartered in Canada, that own Canadian IP? Does it start to go to, branch plants here in Canada? Like, those, I think, are going to be sort of the early indicators of whether this policy is going to realize the kinds of things that the government says it's going to realize, and whether they're kind of following through on their own policy goals, or whether they start to cave to some of the other political pressures they're going to be facing that they have sort of caved to in the past around jobs, which is something they're really going to be feeling the pinch on very soon.
I'll kick in two. So the two things I'll be watching: business investment for sure. I mean, that's the key. That's the engine on the plane that is the Canadian economy. That's sort of that needs to start turning over again if we're going to sort of get out of this soft patch we're in. And I'll drift over to Laura's turf for the next one. The other thing I'm paying attention to, but that's just the political headwinds. You know, the regulatory thicket in Canada is problem number one when it's come to sort of certainty around investing in Canada. But close behind is just the political environment over the last little while, with sort of minority governments and complete uncertainty, sort of about what might happen, 2 years down the road if the other guys win. And that's important because the other guys talk about doing things diametrically opposed to what the guys in power are doing. So again, if you're trying to make a 10-year investment and you're going to bank on some policies that say the current government are putting in place, but you've got the conservatives out there making it quite clear that they don't like anything that the government's doing and are going to change it as soon as they get a chance. And you have to anticipate that chance could come around the corner any day now, given that we're in this minority situation. I think it matters, to what extent the political, what I'll call headwinds, remain manageable, or they really start to pick up and make it that much harder to get things done. So, I mean, looking to a certain extent on polling around the federal level, but I think it's very important what's going on in the provinces. One of the things that Prime Minister Carney's been able to do is get the provinces working with him instead of working against Ottawa. That's huge. And if he can keep that alignment, then politics could actually become a tailwind. So we'll see. Not a lot of history of Ottawa and the provinces getting on in Canada, certainly in recent years, but maybe again, come back to the context. It's totally new. Lots of what we think we know doesn't matter in this sort of context. So you really have to question your priors every time you're trying to assess something, and just think like how that might apply in the age we're in now.
Mm-hmm. Wonderful. So where the money is flowing, business investment, and how Ottawa is able to manage some of those political headwinds. Well, thank you very much for that interesting conversation and for sharing those wonderful perspectives. We talked about industrial policy, budget, markets, and more. I want to thank our panelists, Kevin Carmichael and Laura Osman, for sharing those thoughts. And thank you to also our sponsor, Desjardins Group's Royce Mendes, for his remarks off the top. And lastly, thank you to our audience for joining us today and for submitting those fantastic questions. If you're not already a subscriber to The Logic, you can find a link to subscribe in the chat or visit the Logic's website where you can get set up with that. Before we wrap, I want to put some upcoming events on your radar. The long-awaited Logic Summit is coming up on November 3rd. That's less than a month away. This is a subscriber-only event, and early bird tickets are sold out, but subscriber tickets are still available. So please register your interest using the link in the chat. If you'd like to explore opportunities to partner on an event with The Logic, such as the one today, email our Director of Business Partnerships, Ariel Lepper-Walker. You can find The Logic on LinkedIn, Blue Sky, Twitter, and of course on thelogic.co, where you can find a lot of our in-depth reporting, analysis, features, and more news. Thank you so much again, everyone, for your participation in today's event, and have a wonderful day.